Good evening. Hello everyone. Welcome to the BISP Solutions. So today we are going to cover another business rule, that is profit after tax calculation. With the help of business rule, we'll see how to calculate this profit after tax. So I have just taken a scenario where in FCCS, so we are going to use FCCS interface. Um, I'll just first show you what I'll try to do. So suppose we have, you can take any example. Suppose you have um, India Limited and some another New York Limited. And you have, suppose you are doing the calculation for January month. You're trying to calculate the profit at the end of, suppose December 23 for both the entities, or you can do it for single entity, whatever it is. So how to calculate the profit after tax? So suppose you have some sales, just assume the cost of goods sold, and then you will get the margin. That is, if suppose your sales is 1000 for this company, 1500 for this company, cost of goods sold for India Limited is 200, and for New York, suppose it is 150, or you can say 300. So the margin will be 1000 minus 200 is this much. Similarly, 1200 for New York Limited. Now, after that, suppose you have some indirect expenses as marketing, payroll, salary, and so on. So, suppose the marketing expenses is, here it is 100, 50, 70, and here it is, you can assume as 200, 150, 80. So the total expense will be, here it is 220 for India Limited, and 430 total expense for New York Limited. So your profit will be your margin minus total expenses. So this is nothing but before taxes. So this will be profit before tax. So you can see margin is 800 and total expenses 220. Similarly, 770 for New York Limited. Now the taxes, suppose, are sales tax, federal tax, and so on. And the sales tax amount, it is suppose coming to be 50 for this and 100 for as federal tax, and you have 100 as your sales tax and 80 as your federal tax. So now what will be profit after tax? It will be profit before tax minus both the taxes that the company have to pay. Similarly, for New York also, 770 is profit before tax, sales tax is 100, and federal tax is 80. So this is we are going to calculate with the help of a business rule, writing business rule. The same how I have done here, same we'll do in the FCCS application as well. Okay. So what we were doing is we were calculating this margin, then this total expenses, Then we have done the calculation for this profit before tax and then this profit after tax, right? Okay, so coming back to the application, I have similarly created some of the accounts as just I have replicated those accounts. As you can see, sales and cost of goods sold. So I have revenue and cost of sales. So when you'll subtract revenue and cost of sales, you'll get margin. So I have created this margin account. Then you have these two expenses as marketing, payroll, and salary. So I have created under total expenses these two expenses as payroll and marketing. So this, then there's a total expense account, the sum of those two expenses. Then you have taxes, naming as say okay, yeah, you have the profit. Profit is nothing but your profit before tax. I have given the name as profit. Then after that you have total tax, and under that you have GST and sales tax. And the sales tax is calculated by some percentage, that is sales tax percentage. And at the last you'll get the profit after tax. When you'll deduct these taxes from the profit before tax, you'll reach till profit after tax. Now going back to the rule. Okay, so I have already written this rule. I'll make you understand first this one. See, I have fixed my three dimensions, that is my data source dimension, movement, and view. So data source I have used as FCCS data input, movement member I have used as no movement, view I have used as periodic. Yeah, I have also set the smart view as all the similar I have used these all dimensions. That is my view is my scenario is actual, period I have used as March, year is FY21, view is periodic, currency I have used as entity currency, movement as no movement, data source as data input, consolidation as entity input. This is my entity, that is ABC Limited. I'm just showing you the calculation for a single entity, and these are all my accounts. So you can see cost of sales and revenue. So when you deduct these two, you will get the margin. Even you can show it in the same way. You can show the margin over here. Okay, so sales revenue minus cost of sales will be equals to your margin, and you have then other expenses naming payroll and marketing expenses, which will show us the sum total of it will be giving you a total expense. So when you deduct total expenses from this margin, you will reach till the profit. And then you have two taxes naming this GST and sales tax. So profit before tax minus your all taxes, it will give you profit after tax. Okay, so I have no numbers right now entered. So first we'll see the calculation. So similarly, what I want to calculate, I have written for all of them, like margin. We'll keep on comparing, like margin will be equals to cost of say revenue minus cost of sales. So you can see revenue minus cost of sales. This is the first that will give you the calculation of margin. Then after margin, the second is I have some expenses, that is this is your, which is coming from a direct, okay, that is your gross profit. Now you will be coming, you are calculating your expenses, indirect expenses, that is your payroll and marketing, which we have given as. So you can see the payroll and marketing expenses, when we'll add both these, it will give you the total expenses, correct? After that, yeah, the third is, we have seen this margin, revenue minus cost of sales. Then we have seen the total expenses, that is your payroll and your marketing expense, that is the sum of these two, payroll and marketing. So now this profit is nothing but your profit before tax, that is whatever is your margin, reduce total expenses from your margin. So margin minus total expenses, will give you profit. So after this is nothing but then this number will be calculated, that is your profit amount. Then you have sales tax, percentage is given. So how to calculate the sales tax out of that sales tax percentage? So whatever is the revenue in multiply sales tax percentage, you'll get the sales tax amount. So revenue is this much. When you'll apply the sales tax percentage on this revenue, you will get the sales tax amount, that is this much. And so on this, then you will get sales tax. This will give you total expenses. So when you add these both, it will give you total tax equals to GST plus sales tax, and then PAT equals to profit. Alright. So now you can see sales tax equals to whatever is the revenue. If you multiply sales tax percentage, you will get the sales tax amount. Okay, then you can calculate the total taxes, that is you have two tax, sales tax and GST. So the sum of these two will give you total tax, and ultimately profit after tax is nothing but whatever is your profit before tax minus the total tax amount, that is whatever is your profit that you calculated, then reduce the taxes from it, you will reach till profit after tax. So this all we have done. After writing this rule, we have validated it. Then you can deploy this rule and then launch it. So when you launch it, you have to enter this runtime prompt values. So like consolidation, I have defined the value as entity input. For currency, I have used as entity currency. My entity is ABC Limited. Period is March. Scenario is actual. Year is FY21. So when you click on OK, you can see it is completed with no errors. Now you can go back to your smart view and oh, okay, we missed one thing, that we didn't enter the numbers. Okay, so you can define it like right now. Suppose your revenue is your 1000, cost of sales is 200. You can click on submit. Okay, revenue is 1000, cost of sales is 200. Then you have two expenses as marketing expense and payroll expense. You can consider them as suppose 100 and 100. So after that you will get the sum of total expenses. Submit this. So total expenses, it will be calculated by the system with the help of business rule that we have written. So when you have written this revenue and cost of sales, it will give you the total margin amount. And once you will get the margin, you have entered the expenses, so you will get profit before tax amount. And now you want to enter the taxes. So sales tax percentage you can define as 5%, and sales tax will be calculated based on the formula that you have written, that is your revenue, or the rule that you have written, that is the revenue into sales tax percentage. And you can enter the GST So GST you can enter as 100 and submit it. So then you will get the sales tax and the total of tax and the profit after tax. Okay. So go there and launch it again so that it will to get the numbers. Okay, now we'll keep on comparing the numbers. First it is margin equals to revenue minus cost of sales. So you can see margin, we haven't got the number. So it should be revenue is 1000, cost of sales is 200. So it should be 800. So when you refresh it, you will get the margin as 800. See, we have done the calculation for margin. Second is total expenses, which is the sum total of your payroll and marketing. So your payroll was 100 and marketing is your 100. So it should be total expenses should be 200. We haven't got that account. So you can from member selection pull that account. Yes. So you need total expenses, you also need total tax, and you need PAT. These three accounts. Okay. So we have seen how margin is being calculated. After that, we were seeing the total expenses, that is your sum total of payroll and marketing, which is nothing but your 200. It should come to 200, which is correct. Okay, third, we have given the calculation as profit equals to margin minus total expenses. So profit, it should be equals to, so we are calculating the number of profit now. So margin minus total expenses, which should be 800 minus 200, it should give you 600. Then you have sales tax calculation. So we have defined the percentage of sales tax as 0.05. So revenue into sales tax percentage. So to derive to the sales tax amount, so revenue is nothing but 1000 into 5%, it will give you the 50. You can see 1000 into 0.05, that is your 50. So this is also correct. Then you have total tax equals to GST. Total tax equals to GST plus sales tax. Okay, so that is the sum of both the taxes. So GST we entered at 100 and sales tax calculated was 50. So sum of these two is 150. So you can see total tax equals to 150. And now ultimately the profit after tax, we need to calculate it. So it is profit minus total tax. So profit is 600 and that is the profit before tax, and the sum of taxes, it's your 150. So 600 minus 150 is your 450. So this is the ultimate result that we have written the rule for. Yeah, so this was the business rule for the calculation of profit after tax. So this is how we do that. And if you have any questions, please contact BISP Solutions and we'll connect in the next session for the next rule. Thank you. Thank you all for the time.